Good afternoon, everyone. Before I begin, I'd like to acknowledge that we're on the traditional lands of Treaty 6. I'd also like to acknowledge the Métis people of Alberta who share a deep connection with this land. In a couple hours, I'll table this government's Budget 2018 fiscal plan. Budget 2018 puts the priorities of everyday Albertans first. After the worst recession in a generation, our economy is recovering. Last year, we led the country in economic growth at 4.5%. Jobs returned, with 90,000 full-time jobs created and more Albertans working than ever before in our province's history. And the deficit dropped by $1.4 billion at the third quarter. This is all good news for Albertans, but there's still more work to do to make sure that every person feels a recovery in their own homes and lives. That is the work of this year's budget, to make sure the economic recovery is built to last and built for everyday Albertans. Our plan to achieve this begins with Budget 2018. It will help us create jobs, diversify our economy, and be more resilient. Budget 2018 has 3 pillars. First, controlling costs to stay on a path to balance. Second, investing in jobs and diversification. And third, protecting public services and supporting Albertans. When we were first elected to office, we inherited one of the worst recessions Alberta has ever experienced. The downturn was severe, and it affected many families and communities across the province. We took action to create jobs, make life more affordable for people, and get our economy more diversified. This was the right choice. The price of oil cannot dictate the quality of our kids' education and cannot dictate the quality of health care our loved ones receive. That was the direction of past governments. Albertans deserve better, so we chose a better path. We invested in communities by building and modernizing infrastructure and supported individuals and families by strengthening public services. We supported the energy industry by securing approval for new pipelines and investing in value-added production. And we continue to fight for new pipelines. It's working. The economy is looking up, creating jobs and expanding business activity. Employment levels are at record levels. Exports are up almost 30%, manufacturing is up, housing starts grew by 20%. The province led the country in economic growth in 2017, and we're expecting to be near the top again in 2018 with strong growth of 2.7%. Despite this good news and that of 90,000 Albertans returning to work, there's still more work to do. That's why Budget 2018 helps build a more diversified and resilient economy. We're fighting to diversify our export markets by standing up for the Kinder Morgan Trans Mountain Pipeline expansion. We're supporting diversification in the energy sector with more petrochemical production and partial upgrading. We're extending tax credits to help businesses grow and expand. We are introducing new tax credits to encourage investments in our tech sector. And we're supporting technology and emerging sectors like biotechnology and clean technology with 3,000 new tech-focused post-secondary spaces and a range of new scholarships. There's a huge growth and diversification opportunity in the tech sector. At the same time, we are protecting the hospitals, schools, and public services Albertans rely on. As our volatile resource revenue has gone up and down with the price of oil, past governments mirrored this rise and fall with inconsistent and unpredictable spending growth. We changed course in 2015 and put those unpredictable days behind us. Budget 2018 provides a roadmap for the stable funding of services while still controlling spending growth, targeting operation spending growth below population plus inflation. And while we control this growth, we're making long overdue investments to make life better for people. We're hiring more police and doing more to combat the opioid crisis. We're building more new schools. We're building seniors housing and affordable housing across Alberta. We're expanding affordable childcare by 4,500 spaces. We're expanding our school lunches program to 30,000 kids. We're hiring more teachers and more teachers' aides to keep up with enrollment. All of that work and more, work that creates jobs, makes life more affordable for people, and improves public services, is fully in line with our commitment to balance the budget. For too long, Alberta has been locked in a cycle of boom and bust spending that tracked the price of non-renewable resource revenue. Earlier this decade, when oil prices were high and the economy was growing, the budget remained unbalanced and savings were not put aside for the future. Between 2010-11 and 2014-15, for example, oil prices averaged $90 a barrel, while the economy grew more than 5% per year, more than double the national average. Yet over this period, the government ran deficits in all but one fiscal year. Boom and bust spending was inefficient and unstable. Upon taking office, we set out to fix this with a plan to smooth out the wild spending swings that characterized budgeting in Alberta. First, we restored progressive taxation, asking the top 7% of income earners to pay a little more and support healthcare and education. Second, we raised the general corporate tax rate by 2 percentage points to 12%. And third, we implemented an economy-wide price on carbon. With Alberta's economy in recession, every dollar raised through the carbon price was reinvested in the economy in rebates, infrastructure investments, and initiatives to lower greenhouse gas emissions and improve energy efficiency. Even with those changes, Albertans and Alberta businesses pay at least $11.2 billion less in taxes than they would in any other province. Alberta's tax advantage is secure. Today, with the private sector gaining momentum, these important and long overdue tax reforms will help reduce our over-reliance on non-renewable resource revenue. Revenues from corporate and personal income taxes are forecast to grow by as much as $1.2 billion this year, with the amount increasing over time as our economy grows. Moreover, as our economy relies less on government stimulus, additional carbon revenue will help to contribute to an improving bottom line. Beginning in 2021, additional revenue resulting from the federally imposed price on carbon tied to the construction of the Trans Mountain Pipeline will be used to support vital public services as the province stays on track to balance the budget by 2023. This is an important step in the direction of stable, predictable budgeting that this province needs. But to succeed, it must be joined by other measures to keep spending growth down to stable and manageable levels. That's why this budget continues our work to put Albertans first and eliminate waste. Things like taxpayer-funded golf memberships for executives of government boards and agencies, the ever-growing alphabet soup of agencies, boards, and commissions, the out-of-whack salaries for public executives, those days are gone. Our government is working for everyday people, and we are going to make sure every cent we are entrusted with goes to supporting the needs and priorities of Albertans. Salaries for school superintendents and university executives, they will be brought in line. Hospitality and travel costs, they will be kept way down. And areas of government such as communications, IT, finance, and human resources are being consolidated. We're also following through on the advice of David Dodge, the former governor of the Bank of Canada, to bring capital spending down to historic levels as the economy recovers. With all the actions I've mentioned and more, Budget 2018 truly is a roadmap to a recovery built to last. Alberta's best days are ahead of us, not behind us. We are coming out of the recession strong and have placed our province on a responsible path to a balanced budget. We do so surrounded by new signs of hope and determination. Albertans and Canadians are behind us in our efforts to get a new Canadian pipeline to the Canadian coast. Our kids are getting a high-quality education in great public schools. More kids are also getting nutritious meals when they go to school, and more Albertans are working than ever before. I can say with confidence that Budget 2018 is a recovery built to last for generations. I'll end my remarks today by thanking all of the folks in the Treasury Board and Finance who have worked so hard on this budget. I want to extend my appreciation to them and all of the people in government who have helped out. And I want to thank you all for listening. I'm happy to take your questions.
Just before we get to questions, we'll say that mic there closest to the door is mic 1. This will be mic 2. We'll alternate between the two and then go down to Calgary. I'll just ask that you limit your questions to a main question plus a follow-up so that we can get through everyone. We'll start over at mic 1. Graham.
Minister, yes, you have a path of sorts to balance 2023, but at that point you're going to have a debt of $96 billion. What do you say to Albertans who be thinking, yes, some good news here, there's also a lot of bad news?
No, I think, Graham, that there's good news in this budget. This budget, as I said, continues to support the vital programs and services Albertans need. It continues to work on the diversification of our economy, and we need that vitally because of the wild swings in our revenues. And we continue to have a focus on the lowest net debt to GDP of any province in this country, and will continue to be that way even when we balance in 2023.
What do you think of a $96 billion debt?
I think that's what it will take to make sure that we don't do without the important programs and services Albertans have come to rely on. I think we have shown that we're responsible in controlling the costs, the operational costs of government. We're bringing that down. And so I would say to Albertans, you know, had another government been in place, they would have drastically and extremely slashed the necessary supports Albertans need in healthcare and education and social services, and we would all been a lot worse off. We are managing our situation well. We have the ability to do that, and will grow our economy and be better off in the long run.
We'll go over to mic 2.
Yeah, g'day, Minister. So you've got that pathway thing. Is this just a way to try and placate credit rating agencies?
No, this is something Albertans have been asking for, and we have been promising to show them. We can get to balance, and we will do so in 5 years, but we won't do that at the expense of their programs and services. We won't do risky and extreme things like others are talking about that need to happen. We're showing where we can prudently get back to balance by keeping our focus on diversification, our focus on the important things in terms of service delivery they want, in terms of healthcare and education and social services and other things. And we are controlling the costs of government, something the previous government wasn't able to do even with $90 oil.
But what happens if the pipelines don't get built because you are relying on that?
What happens, you know, the pipelines will get built. They're federally approved. They are...
What if they don't?
They are approved. They're federally approved. They're in the interests of national infrastructure, Emma. They are in the interests of Canadian energy sovereignty and getting the best value for our natural resources, getting them to a diversified market. They will get built because they're important for Canada, they're important for Alberta, and we're fully behind all of that.
Over to mic 1.
Yeah, I'd just like to follow up on Emma's question there. I mean, your forecasts, your projections are based on a pipeline getting built that is no doubt there's a lot of question marks around that. It's based on a climate plan that is in jeopardy of falling apart, and even the federal environment minister admits that. So you're talking about revenue from a pipeline, revenue from a carbon tax that may not exist into your, what does your contingency plan look like? I mean, how much farther does this push the debt? How much farther does this push the deficit returning to balance down the road? You must have numbers. You must have projections.
What I can tell you is our path to balance is not solely predicated on TMX. Our path to balance is predicated on a number of things, including controlling the costs of government going forward, keeping the expenditures below population plus inflation. That in itself is no small feat. And if we're able to do that, and that's our target, and we've been showing where we can do that, we will get to balance. We're also working to diversify the economy so that we have more stable revenues coming forward, and we are confident that TMX, Line 3 is under construction, and TMX will get built because it's in the national interest.
Over to Michelle.
Getting back to this $97 billion in debt, are you being straightforward with Albertans minister by saying this is a path to balance when we're going to have that amount of debt in 5 years?
Absolutely, we're straightforward in saying this is a path to balance. We need to balance first. There is a deficit we are closing, and that gap closes in 5 years.
But the $96 billion did not appear in the budget document at all. This came out through questions to officials during the tech briefing. So why did that figure not appear in the budget documents that are publicly released to Albertans?
We have a 3-year fiscal plan in front of you, and I'm sure...
But you also have a 5-year plan to balance.
That's right. There is a 5-year plan to balance, and the 3-year plan, fiscal plan before you identifies what the debt will be, identifies what the deficits are, and we are going to close that deficit gap by 5 in the 5th year, and we're going to balance, and the debt will be accumulated, is identified that you talked about. But we'll still, even at that point in time, be the lowest net debt to GDP in the entire country. That's how provinces compare their net debt to each other, and we're light years ahead of other provinces.
And how long do you think that it'll take the province to pay off $97 billion in debt?
You know, I'm focused on balancing, thank you, first, and once we get to balance, we will continue to work and come up with plans to address our debt.
Over to Mike 1, we'll come back to Mike 2, and then go to Calgary.
One more Trans Mountain question. Now, I know the initial timeline said it was done by the end of 2020. Your numbers show that you expect it to be done in moving oil by 2021.
Correct.
It's already delayed, and there are a number of court challenges. If that date gets pushed back, does that also push back the date, the year that you can balance the budget?
Again, as I said, our path to balance is not predicated solely on Trans Mountain
Sorry,
pipeline.
you did say that, but that's part of it, and it's a big part of it. So I'm asking yes or no. Does it push back the balanced budget from 23-24 if the pipeline's not built by 2021?
My focus and my remit in this position is to balance by 2023.
Over to Mike 2.
Just a question on cannabis. So the federal government will allow provinces to charge HST or PST, and it looks like from these budget documents, basically Alberta is going to be given that room to charge a provincial portion on cannabis sales. Does that essentially amount to a PST on cannabis in Alberta?
We've worked with the federal government, and because we don't have a PST in this province, they are going to be assisting us in the collection of taxation with regard to cannabis. And the reason they're doing that is that they want to make sure that cannabis, and all provinces do too, cannabis is relatively the same price in every province. We don't want to have disparities across the country in terms of pricing for cannabis, and so we will essentially match whatever happens in other provinces around taxation.
Is that an unexpected source of revenue for the province, or when did that get laid out exactly?
You know, at the discussions of finance ministers in late November, early December, there was discussions about that.
We'll go to Calgary. Can we have the first question, please?
Thank you. Jeff Morgan with the Financial Post. So this budget shows revenue from the carbon levy going into general revenues beginning in 2021. So as a result, has this government decided that the carbon levy will no longer be carbon neutral, or sorry, be revenue neutral?
Oh, you know, on the Alberta Climate Leadership Plan funds, those will continue to be, every dime of those will continue to be reinvested back into the economy in Alberta through things like rebates and vital assistance to decarbon our energy and other things to energy efficiencies. So every dime of the Alberta Climate Leadership Plan will go back into Alberta. The additional revenue that will come from the federally imposed carbon price tied to the Trans Mountain Pipeline construction will be used to support vital public services in this province, helping to cut further into the deficit, yes.
So isn't that a bit of a change from what was initially announced? And what prevents future governments, or even your own government, from using an even larger share in the future into general revenues? Well,
what I'm telling you is that the Alberta Climate Leadership Funds will continue to be reinvested in Alberta. That's not changing. The additional federally imposed carbon price, that's tied to the Trans Mountain. We're going to be using that to continue to provide Albertans with programs and services, vital programs and services that they rely on and they need. So that's going to help us with regard to the deficit. It's going to help us with regard to paying for those services.
Can we have the next caller in Calgary, or next question from Calgary?
Hi, Minister. Chris Fark with the Calgary Herald. I'm wondering if you can tell me, how does this get Alberta off the oil price roller coaster when you're basing some of your balancing of the books on higher oil prices and on building new pipelines?
Well, with regard to oil prices, we're using the private sector oil prices. You can go into the book and see where it's at near the back in terms of financial tables and see what those are and who provided those from the private sector. That's the way it's always been done in terms of forecasting oil. But with regard to the oil and gas roller coaster, the royalty roller coaster you're talking about, we are seeing in the near term, we're seeing private sector invest across the economy in different ways than oil and gas solely. And as we continue to have diversification efforts in this budget and future ones, we'll see more sectors pick up, like the tech sector is one where there's going to be tax credits available to. The Alberta Investor Tax Credit has shown a good uptake, as well as the other tax credits we put in place to diversify our economy. So we are working strongly to move us out of those volatile revenue swings that come with being an oil and gas sector province only.
Just to follow up, how secure do you feel that you're going to avoid another credit rating downgrade? And if you do feel that way, why?
Sorry, there was some noise in the room. I heard the first part. I'll just jump in. What I'm focused on, Chris, is continuing to continue with the contract that we have with Albertans, that we are going to get to balance. We're not going to slash programs and services to get there, and we're going to invest time and energy in diversifying the economy. That's what Albertans want us to do, and we're following through with that. I imagine I'll be meeting with credit rating agencies and others to talk later.
We'll take one more from Calgary, and then we'll come back to the room.
It's Bill Kaufman with Post Media. I'm just wondering if I didn't see anything about provincial support for a possible Calgary Olympics bid in this budget. And if there's nothing in this budget, what could we expect?
Is it Bill?
Yes, it is.
Hi, Bill. We're having ongoing discussions, of course, with Calgary about all of that. So we've set aside some monies proactively in our budget to go down the BIDCO road should we decide as a government to go down that road. That's what I can tell you, and there's been no decision, of course, here, but we've proactively addressed that in this budget.
When do you think we might be hearing something either way from the province? The city says, that the clock is ticking.
Soon.
Yeah, we'll come back to the room. Mic 1.
Just on cannabis again, what can municipalities expect to see from cannabis revenue from the province?
Well, that's getting pretty far ahead of ourselves because there's still more information we need from Ottawa, frankly, to understand fully what, as the person over here was asking, is available. So until we get that information, We'll have to stay tuned with municipalities, but they can anticipate conversations and additional conversations in the future from us around revenue.
I mean, like the mayors of Edmonton and Calgary have both expressed concerns that they're going to have to bolster a lot of costs. Like,
They're
what
not
would
the
you say
only
to
ones.
them?
They're not the only ones. Again, it's pretty early days. We're needing more information from Ottawa. We have to have additional discussions with municipalities. There are costs that we are incurring right now at the Government of Alberta to set up a framework for all of this. And once we get further info from Ottawa, we'll be able to sit down with municipalities.
Over to Mike 2.
Hello. Back on the federal carbon tax, are you saying today to Albertans that the additional taxes that they will pay on their carbon emissions, those taxes are not going to help the environment in any way?
No, I'm not saying that.
So what is it you're saying on the how will it impact?
The climate leadership plan is helping the environment in Alberta. And the federal price on carbon, which tied to the Trans Mountain pipeline expansion, will further help reduce emissions by people making choices, alternative choices around purchasing carbon-laden fuels.
But you're not reinvesting those funds to
do
anything more?
The federal ones?
Yes.
Yeah, no, but we'll be investing those into the programs and services Albertans count on.
Over to Mike 1.
Hi, Minister. Is it fair to say, this is just a follow to cannabis, is it fair to say that cannabis legalization is not going to be such a revenue generator as some may have predicted or hoped?
Hope is probably the word. I think there's lots of activity, of course, in the private market around all of this, and jockeying and, you know, licensed producers and all that sort of thing. I can tell you that for the first couple years, we're not seeing this as a revenue generator at the Government of Alberta. We're seeing it as a net loss.
Follow up? No? Okay, we'll go to Calgary for a couple more questions.
Hey there, it's Robson Fletcher from CBC. I just had a question, Minister, about the corporate income tax projections. They're up 18% this year, according to the budget, and are expected to increase by double digits for the next 3 years. And yet by 2020, 2021, they'll be at $5.7 billion, which is still less than they were in 2014. I guess my question is, I mean, your government's raised the corporate income tax rate from 10 to 12%. What does it say about the health of the private sector in Alberta if we're going to be taking in less money with a higher tax rate in 2020 than we were in 2014?
Yeah, I think it says we've been through the worst recession in the generation, Robson, and it means that many corporations weren't profitable. So we will see the economy start to expand again beyond 2014 in 2019, and we'll see more corporations being profitable as we go forward. I think it says, you know, the 10% to 12% put us in line. I think if you go to the tax tables, comparative tax tables of all provinces, we're the same as every other province in Alberta, in Canada, and we're not higher, we're not lower. I think the only one who's lower is Quebec by a fraction, and they seem to shave all of their numbers.
And just as a follow-up, with respect to some of those question marks around pipelines going forward, I mean, aside from the resource revenue projections being vulnerable to pipelines not coming to fruition as planned, I mean, how vulnerable do you see the corporate income tax revenue projections if pipelines are not forthcoming as you expect them to be?
There's a lot of ifs there. But I can tell you that I'm confident that TMX will get built. Line 3 is under construction. And the work we're doing to diversify the economy will attract even more private sector investment across the economy. So I'm pretty confident in our forecasts. We have worked long and hard, and we have the ability, of course, and quarterly updates to revise those. But I see no reason to revise those or feel less confident about them at this point.
We'll stay in Calgary for another one.
Hi, Minister. Sammy Hudis from Calgary Herald and Sun. The budget includes $11 million for sexual assault support centers. I'm wondering, is this on top of $8 million committed earlier this month? And if so, how will this new funding be used differently? What will it go for, basically?
No, I think this is cumulative. I think they were at the $3 or $4 million yearly, and the $8 million is on top of this. So this 11, I think, is the total of all the Government of Alberta assistance for 2018-19.
It's all cumulative then?
That's right.
And so can you expand on how this money, additional $3 million, I guess, will be used then? Or additional $8 million, excuse me, will be used then in addition to the $3 million?
Sorry, I just can't hear you, but the additional $8 million was announced a couple weeks ago, and this will give sexual assault survivors a greater ability to move on with, get the support they need and move on with their lives. It's just one of the examples of this government's having the backs of Albertans who have been through tough things. I can tell you, through the recession, our income supports programs grew, and you'll saw that in Q3. We have the backs of people who were suffering through the recession through no fault of their own, and this sexual assault support is something different, of course, but it's another example where it works. This government works for people.
We'll take one more from Calgary, and then we'll come back to the room.
Jason Markusoff from Maclean's. It's said that budgeting, leading a budget, involves many tough decisions and tough choices. Your cost containment talks about, minor expenses within communications and HR budgets and the ABCs. Can you tell me about a couple of programs that you've decided to cut through operating expenses?
Sure. There were 26 agencies, boards, and commissions that were either consolidated or downsized through the first and second round of the agencies, boards, and commissions review. So there are examples there, and I don't remember all of all of the ABCs, but they occurred. Other important things, of course, is managing compensation through really important practical labor agreements. We've had salary freezes across the APS, or the Alberta Public Service, and we've extended that until 2019, and there are savings there. And we have continued the hiring restraint, Jason, too. The executives and agencies, boards, and commissions, there are savings there of several $1 million because we had cut their salaries and eliminated bonuses, and we're tightly managing the discretionary spending that departments and ministries have, and we've asked for monies back from each of them towards the end of this year to assist us with the targets we wanted to reach for in-year savings.
Follow-up, Jason?
I feel like you answered a couple questions. The question mostly about focusing on agencies, boards, and commissions, which you've covered off in previous years. Can you point me to a single program within departmental spending that you've particularly had to give a hard whack to?
Yeah, in the area of communications, we have consolidated the communications function within government. We will cut that budget by, I think it's 15%. Jason, we're also doing similar things consolidation-wise with HR, human resources for government, with IT for government, and those will be areas that spend less going forward as a result of the consolidations and efficiencies we derive.
We'll come back to the room. Mic 1.
Rick.
You speak about spending restraint, and in the 2016 budget, you promised to keep things within 2.2%, went up 8.4%.
I don't know about that.
Last year, it was 3%, and I think it was 5.4%. It went up in the end. Do we have any hope whatsoever this budget's going to sort of the actual spending is going to resemble this budget, given past experience?
Sure. Well, I don't agree with your first set of numbers, but I can tell you that we've done a better job from the previous government with the wild swings that they had in operational growth. If you're just talking about operational growth, we have bent that curve, and I stopped using that term because, anyway, bent it going forward. So it's the target is, and we have targets, and we're achieving outcomes that say we're meeting targets. In the area of healthcare, for instance, that was growing at a 6% year-over-year operational expenditures, and we have bent that to around 4%, and our target for that is 3%. And we have realistic targets. We need to continue to work with people across government to get there, but we're doing that.
How do you justify something like the $1.5 billion in supplementary spending that just went through in Bill 4, I think it was?
Yeah, well, I can justify that by talking about what that went to. That went to Albertans who have come through a recession and needed additional income support. So there's income support money there, and there's about $800 million that was essentially monies paid up front to municipalities that we had planned to expend in subsequent years, but we brought it forward so that they could better manage their programs that they want to spend money on to keep this economy firing on all cylinders. So we had the opportunity and the flexibility in this budget, the 17-18 budget, to do that, and we did it for the benefit of municipalities and the economy and people, Albertans.
We'll come over to Mike 2.
Me again. You've got, in this pathway, you've got, diversification, which you've already announced before. You've got the beer stuff, which you'd already announced before. It all seems like kind of pretty small potatoes. Are you doing even enough considering the size of the debt we're going to be facing by 2023?
So are you
doing enough?
You're talking about diversification generally.
Yeah, are you doing enough?
Oh yeah, no, I think we're focused a lot on diversification. We're enhancing the competitiveness of Alberta's oil sands industry with $1 billion over 8 years, beginning in 1920, through the various tools such as loan guarantees and grants for up to 5 partial upgrading facilities that'll attract $5 billion in private investment and create over 4,000 jobs. That's value added to our energy sector and getting a better return. Frankly, instead of the diluent leaving, we're going to be upgrading that. We're also looking at growing investment in the natural gas processing with $500 million in royalty credits beginning in 2020 for a second phase of the petrochemical diversification. The first phase was really successful and attracted private sector investment, and there will be a plant built in the heartland area as a result. So yes, those are the areas in the kind of the sweet spot of Alberta where we're known for in terms of the energy sector, but we're also working in the agribusiness sector as well significantly.
Can we expect more diversification coming in budget 2019?
Yes.
Over to Mike 1.
Hi, Minister. You mentioned the cutting back of school superintendent salaries and bringing in line the salaries for university executives. What do you mean by bringing them in line with what?
Oh, there's been a significant amount of work to benchmark executives at universities with executives at universities across the country. So we will be rolling that work out soon, those results of that work out soon in terms of what those will be.
Does that mean cuts to their salaries?
Like we dealt with the executives of agencies, boards, and commissions earlier on, we have to be mindful that contracts are in place with people, and we have given a 2-year time frame to bring those salaries in line with where we benchmark them to. So it means in the future, yes, or when people are renewing their contracts or when there are new hires to those positions, they will fall into those bands.
Okay, we'll go to Calgary. I think there's one final question there.
Yeah, Minister, it's Brooks from CBC. You've talked, you're estimating that you're going to contain healthcare spending to about 3% in the coming year. What about, cutting that and making it less growth in health?
When I think about the contract this government has with Albertans, I think about what we were elected on. We said we would maintain the strong health care that Albertans have come to enjoy, that we would fully fund enrollment growth in education, and we would make sure that when people go to university, there's spots for them. So we're carefully controlling health spending, which accounts for over 40% of our government's annual operating expense. And we're going to keep that that rather large piece of our budget under control by keeping the growth below population plus inflation. And that is just around 3%. Maybe it's a little higher for population plus inflation. 3%, it's really challenging. It's a great target to have. We've been achieving great results, and that will help us get to balance as well as in many other things that we're doing.
Follow-up, Brooks? No, we'll come back to the room then. Mic 1.
Hi, Jen from the St. Albert Gazette. I'm just wondering if municipalities will be receiving any money before legalization to deal with the startup costs for cannabis.
We're in discussions with municipalities. We'll have to have more discussions, obviously, but we do need more information from Ottawa, as I said before we are clear about what exactly is going to be happening. So, it's kind of municipalities will be part of the discussion when we get there.
So is your intention to give them money before legalization, or is that a goal, or are you just hoping to give them money in the next budget?
Oh, well, no, the goal is to kind of get clear where Ottawa's going with legalization first, to have a framework in place that ensures that retail is properly handled, online is properly handled, and that children, communities, and the illicit market is all addressed, and municipalities will be part of those conversations.
Looks like Kim gets the last word.
It's a short one. Hi, Minister. I'm just wondering, you're just over a year away from the next provincial election. Why are there so many political references in your budget speech? Really, what does the Sky Palace have to do with the budget?
You're talking about the budget speech downstairs?
Yeah, budget speech.
Okay. What does the Sky Palace do? Well, it's an example of waste from the previous government that we're cleaning up.
Do you think Albertans have forgotten about it?
I don't think they've forgotten about it. I think it's something that's, when you talk to Albertans about the previous leadership here and how they operated, it doesn't take very long before they mention the Sky Palace.
Thank you.
Okay, we'll leave it there. Thank you very much.
Okay, thanks a lot.